You'll be able to meet with Chovav at drinks coming up shortly, but right now we're going to invite Yonatan Altman back to the stage to head up a panel, which is a panel called So How Do We Do It? Let's look at various models of investment. So Yonatan, over to you. Thank you. Clicker. Oh. What?
Good afternoon, everybody. Please, panel members, join me. Good afternoon, everybody. I know we all towards the end and maybe a little bit tired, so we'll try to wake up the discussion a little bit here. I have good partners for that. Really amazing panelists from different approaches and different experiences, and I think we'll have an interesting one. Well, we all talk. We're here in Sydney, and people here, Aussies, they are looking up to our experience and want to learn. But we have to admit that the market is changing so dramatically in the last couple of years, especially after '08 and ever since, and things are really changing rapidly. And on both sides, the companies on the one hand and investors on the other hand should really react to these changes and maybe adopt some changes in their business models, in their activities, where they emphasize and how they do business. So we are really lucky to have such a panel here. And first thing, I'd like just to give everybody the opportunity just to introduce themselves personally and let us know a little bit about their organization and the thing they do on a day-to-day basis. So maybe we start with Sigalit.
So my name is Sigalit. I'm a partner at Growth Ventures. We are an early stage type of venture fund operating in a unique model of investing and supporting early stage company with deep technology.
Yeah, Alex Waislitz, based in Melbourne. I started a private investment company some 20 odd years ago, specializing in small and mid-cap public companies. We do private equity, real estate as well. Sort of an activist, or it's a popular term, but more like a constructive catalyst, where we're engaged with the investments we're in to try to encourage the executive and the board to bring out the best of the companies. We get involved, and more recently have been doing a lot, as is the nature of the world that you referred to in the technology space, to the point where I'm actually launching a technology-listed investment company in Australia shortly, which will enable us to offer a unique type of product, which is publicly listed technology companies, pre-IPO, earlier stage or series stage, and including global investments, which we're doing a lot more in Israel and in the US with.
Thanks.
Eylon, Penchas. I'm a general partner with a group called Viola, which is one of the more veteran and large private equity and venture capital groups operating in Israel. We invest from early stage, typically A round, in tech-related IT and communication companies. And we have facilities to invest all the way through late stage and growth capital, including public companies.
Hi, I'm Andrey, Shirben, entrepreneur and investor. Been doing it for about 20 years. Started about 15 of my own companies, crashed the first 7 or 8 of them. Invested in another 60 or so, primarily out of my own capital. And recently launched with 3 of my partners, Follow the Seed, which is an algorithmic, data-driven fund.
I'm Gary Leibler, and even though I speak with an Australian accent, I've been living in Israel for the last 26 years, having made Aliyah from Melbourne. I'm the founder and managing partner of Shavit Capital. Basically, we've just completed our fourth fund, and what we do is we invest in late-stage opportunities. Basically, we do the last round of finance for companies that are pursuing IPOs or any other form of exit. In that context, just to give you an example, over a quarter of the companies, Israeli companies that went public in the last few years in the US were our companies. And just to give you an example of the last 5 companies that we invested in the last 2 years, including companies that we invested in the last year, they've raised over $300 million, all at an appreciation. So we're quite active in the late stage area.
So why don't you stay with the mic and just share with us, as I said earlier, we are facing major changes in the climate and in the landscape of investments in Israel, especially in the tech field. How do you see these changes to date?
Well, the changes on a number of levels, and I'll first just give you some basic data. In technology companies in Israel in 2016, over $5 billion is going to be invested in these companies. The interesting statistic is that 80% of that money is going in rounds of finance that are at least $10 million. So what you can see is happening now is a small percentage of the companies are receiving a lot of money. Right now, those companies are about 20% of the companies. The answer would have been radically different a few years ago. So what is happening now is more money is going into later stage deals, and that is showing you an evolution of what's going on in the Israeli both technology sector and also in the financial markets. What's really happening is 10 years ago, 20 years ago, the dream of an entrepreneur was to sell the company as soon as possible, as soon as he'd made a technology which had worked. The market has changed now. Companies want to build a long-term play. So it was rare 10 years ago to find a company that was valued at $1 billion. Now we have a lot of companies that are potentially worth that and more. So that is a major change in the Israeli sector because we have a proven management base and serial entrepreneurs, and there are other factors. There are many changes, but one more factor I think is relevant to bear in mind also, because this affects Australia, is that previously a lot of the money was primarily coming from the States and to a certain extent from Europe. Now we have a lot of money coming into Israeli technology companies, especially from China, but even places like Korea, and in relative terms, even Australia now is a new market. So the investor base that is coming to Israel is far wider than it ever was.
Yeah, and I'd like to add on that another change, continuing what Gary just mentioned, is the fact that we're now seeing larger Israeli companies develop attracts the big private equity investors of the world. So whereas years ago we haven't seen them play in the Israeli scene, now we're seeing people like KKR and Carlyle and TPG come over to Israel, acquiring companies and investing in companies. And they're doing it for three reasons. One, they can find big enough companies which answer to their average check size. Two, the multiples they can find and pay for Israeli companies are still more attractive than what they can find in the US or Western Europe. And three, there's less competition on those deals. So they can do those deals. And for us as an industry, it's very positive to have those players come in, first of all, because of their strength, but also because it's an interesting exit source for our portfolios.
Yes, it brings me to the fact that we see in the last couple of years, we see the VCs moving a bit to later stages. In some occasions, this is happening because of the fact that lots of companies were created in the last decade, let's say. Lots of them are becoming very attractive these days, and it's becoming very popular to invest in late stages. On the other hand, there is no limbo, and other players are entering the market and supporting the early stage investments, both private investors, but also investors that are coming from abroad and are looking to pick up these opportunities in the entry level. Alex, would you like to comment on that?
Yeah, I think that's right, and interesting. I think from the Australian perspective, looking in, just to put in context, I think Australians have, particularly with the mining sector going down, the Australian appetites have shown. The Australian investors have shown more of an appetite to invest in technology stocks, starting with individuals or high net worth people, so more at the retail side, and now it's starting to morph into institutional investment in this space and development of venture capital funds, which have been lacking in the past. And that's one of the reasons a lot of companies went IPO much too early, really, in their life cycle, but historically that's what's happened here. As a result of that appetite, it's not only for Australian technology, there's an appetite now to invest in global technology. And obviously, Israel gets a lot of attention and growing attention in that space. And you can see it just with this conference, more people coming and other ones like it. Interestingly enough, some Israeli companies have identified Australia as a good source of capital, which we are because we've got deep superannuation pools of capital here. And as the venture capital firms are moving up the scale a bit, as you mentioned, and VC firms tend to be quite tough and rigorous in how they lock up companies in terms of their legal structures, clawbacks, and so on. Some Israeli companies are now starting to identify Australia as a source of capital for them directly, let alone to invest in funds, but coming here and looking at, in fact, IPOing or pre-IPO and then IPOing in Australia as a regime, a corporate regime, which is actually an easier operating environment than some of the VC framework that is put around them. So we're getting quite a lot of approaches. One of the reasons I'm doing the technology fund, we're getting a lot of approaches from not only Israeli companies, but US companies as well, but including Israeli companies who see this as a journey that they can list here for 2 or 3 or 4 years and then maybe from here go to the NASDAQ.
I know it's not in the right turn, but I want to get back to Gary on that. The only one of us that really can say that he knows Israelis and Australian on the depth. If you look at that and you look at the DNA of the people and the culture of the people, how do you see the future of doing businesses between Israeli companies and Australian investors?
Well, I hope everyone who's been here today and over the last 2 days of the conference, you should all be very, very encouraged. I personally am very excited by the potential collaboration between Australia and Israel on all the levels that we've already discussed. There's a cultural link. I don't know if any of you know, but over the last year, you've had the Science Minister of Australia come to Israel, the Minister of Innovation, the Prime Minister's wife. The effort that Australia is doing right now to learn from what's going on in Israel is incredible. And I think Alex has just said there are new ways developing of where we can cooperate. I think there's already a lot of Israeli companies gone public here. I don't know how long that's going to go on for, but there are clearly going to be opportunities. Even other players who you're all familiar with, our crowd I'll mention here, they've made a tremendous impact on Australian investors, bringing new people into Israel. So there's a lot of reasons, and there's many reasons this should continue, because the basic connections between Australia and Israel is very strong. I am one of, there are 10% of the Australian Jewish community has made Aliyah. So the ties between Australia and Israel are very strong on many levels. And I can tell you all, as a little bit of encouragement, I don't know how many of you are planning to make Aliyah right now, but I can tell you there are plenty of Israelis who are active in the Israeli technology sectors across the board in different companies, and even in the investment sectors. So we can only be optimistic that this is going to grow.
Andrey, I learned from you about your different approach to checking on companies. And this is really bringing the new technology into the investor side and using the new models of algorithm in order to predict better success or maybe to pass on opportunities. Can you elaborate on that?
Sure. So we actually think that the VC industry kind of got stuck somewhere in the 70s, because for the most of it, it didn't really evolve since then. Same way Steve Jobs and Steve Wozniak were pitching for capital in '76. The entrepreneurs pitch today for the capital in pretty much the same way. So sure, they have nicer presentations, but a lot of the selection criteria are very subjective. It's about who do you know, where did you study, where do you live, sometimes what language do you speak and what's the color of your skin, and sometimes also what's your gender. And it's not like the venture capital investors are all bad guys or racist or whatever. It just...
Thank you.
It's just convenient on one hand, and there's just too many deals on the other. So I'll just give you a very small example. In China alone, when looking at the mobile gaming, there are about 35,000 mobile games being published every year. We're talking about 100 games a year. Only mobile games, only in China. Now, how someone can assess even 10% of this? It's not really humanly possible, even if you're the Sequoia or Andreessen Horowitz or the Kleiner Parkins of the world. And we realized that if we really want to play this game, we need to disrupt it. So our fund is actually a startup. So we've built our own technology, and our technology is available for everyone to use. We actually collaborate with other funds as well in the States, in Europe, in China. And it's free for the entrepreneurs to use. And the process is fully automated, so anyone can just hop on our website, download an SDK, plug it into their product, be it a web service or app or a game or whatever it is. And it takes roughly about 3 weeks worth of data collection. And if the rank that the algorithm gives them is high enough, so the algorithm will just tap one of the partners on the shoulder and will tell them, well, have a look at it. So the algorithm is not replacing the fund manager as the person who's making the decision. It's just enabling him to focus on the 1% of the opportunities that he or she should actually focus on.
Eylon, as really one of the most experienced player in the arena in Israel, and also very diverse in investing in different stages and different models, if you look at the funds industry, what are the major changes that you can, if you look backwards, let's say 5 years, what are the major changes that occurred in the last 5 years, if you look from the perspective of funds?
So I think the industry has developed and crystallized into subsectors in the term that now, if you analyze the Israeli fund industry, you would find basically 3 major buckets of funds. So you find a whole bunch of funds concentrating on very early seed stage companies. And these are, the accelerators and the seed and the angel funds, focusing on the first funding rounds of tech companies. The second bucket would be the venture capital funds, which are the classic venture capital funds. Over there, you would find 3 categories. You would find the local Israeli venture funds who are operating from Israel. You would find foreign, mostly American, but some European venture funds that have teams on the ground doing deals in Israel. And you would find the corporate VCs. So as we've heard before, there are about 300 global tech companies operating in Israel. Many of them have corporate VC programs, and they have the, people searching and screening for deals. And the latest development in the industry is the third bucket, which is the growth capital and the private equity players. As I mentioned before, there are some foreign ones, but also there's a local industry that has developed to fund the later stage companies.
I think just to add to that, what's fantastic about how that's developed, it means that if you're, say, in Australia, you've got now, you can create, in fact, your own kind of portfolio approach to investing into the ecosystem of tech in Israel. So you can have a little bit in the early stage in the basket of, across the second stage of VC, or even in the sort of private equity or later stage growth capital. So it's much easier now to gain exposure through a series of funds or pools of capital that are out there. And if you're large enough, or you can participate on a co-investment basis with some of those. So suddenly, in the last 5 or 7 years, you've been able to expand your opportunities of how you went about investing. It doesn't rely on you having to go there or personal contact so much. Now you create a spread within those different pools of capitals that you can create. So that's a fantastic new environment to participate.
Yeah, absolutely. It's a good point to turn to Sigalit. In the past years, there was a lot of criticism towards the VCs as to the way they operate, as to the way they are involved or not involved enough with the companies, as to their incentives, as to management fees. Grove Ventures as a very hands-on kind of VC who really involves in company and help creating companies. How do you see the change in terms of the state of mind of early stage VCs nowadays?
Okay, so in addition to what was said here, I believe that the VCs or the investment vehicles or the investment models are different. It really depends what are the needs of the company that you invest in. So we invest in early stage, and we believe that when you invest in early stage, you need to be there. You need to be with the company, you need to be with the entrepreneurs. You need to monitor them very closely, to direct them, to advise them. And after that, to follow on with the money to give the support to the company, but also not to lose the connection and the direction with the company. And we believe that in order to do that, you have to have the value to those companies, which means that you have to be a technology expert. So you have to have the ability to monitor and to really manage the technology risk that really fits the early stage. And after that, to continue and monitor with the company with a strategy, market penetration, growth, and after that, much more into the customer expansion.
So the same point I want to get back to you, Alex. VCs or investor in general are expected nowadays to be much more involved in the company, and not only that, but bring not only money but also value to the company. So foreign VCs or foreign investor can really play a role here and open in their own territory, in their own home, and bring value to the company. How do you see that?
Yeah, I think that's certainly an added element. When our own experience in that is that where we've invested in Israel, either directly or through some funds, we have had pushback to us to say, what can you add in your region? And so in the ag space, for example, there's a lot of connectivity we can make here in Australia. But people are asking us to go beyond that and, in our case, open up our network into Asia, and whether it's at the academic side, but more principally on the commercial side, who might be a partner to license a product or who they can work with. So I think, again, I mean, Israelis are always outward looking in terms of the marketplace, as they need to be as a small country. And I think Australia is developing also that need, and they want us to help in that regard. So, I mean, we can't be on the ground here. Obviously, we've got to rely on the people who are there, or you make a choice to go on the ground and employ people. But as far as the flow from Australia, I think the good VC firms, the good companies are looking for more than just capital. Capital is not as scarce as it used to be. Capital is perhaps easier now to access. I'm not saying individual capital raisings are still difficult, but in a general sense, there's plenty of money around. It's now attracted to Israel, but you've got to find the right people to collaborate with, and they want something more from you than just capital. I think is starting to shape up.
Gary, to add on that?
I just want to add on the general comments that you've been hearing right now, but what really is happening as part of the evolution of the Israeli investment sector is funds are becoming much more specialized, and you've been hearing this in the conference as well. We have agrotech funds, we have water funds, we have life science funds, and this means adding to the value that funds can give. This is a major component of what's going on now. And in our case, for example, as I said to you, we're a late-stage pre-IPO fund, so our value added is not on the sectorial basis, but it's on the basis that we're very well connected to the relevant banks that are going to take these companies public. So each fund is now becoming more specialised, and that again goes to Alex's point that if you're looking for what you're looking for in Israel, you can do it on a sectorial basis, you can do it on the stage, early, late, or whatever, but there are many different choices. And that's, I would even say that the overall message here is that we still are a startup nation, but we're a lot more than startup nation today.
Andrey, this is a good point to turn to you. In the past, we saw quite a few Israeli VCs trying to establish their offices and businesses outside of the country. If we look backwards, most of them decided eventually to skip it and to stay where they are and maybe to cooperate with others, while your organization is really international one. Why is that, and how do you think this is going to succeed?
So I think we're all living in a small global village, and today if you really want to be competitive, both as a fund or as a company, like you have to look at the global market, and it all comes back to the people. So I think most of the ones that tried it and then folded back, they just didn't have the right people on the ground. In our case, well, obviously in 10 years from now we'll know whether we've also made some good or bad decisions, but we have someone on the ground in Beijing who is native Chinese. We have someone on the ground in the Valley who's not native American, but he was there pretty much his whole life, and he already founded a company that is valued at probably about $5 billion and built a couple of $1 billion businesses on top of that. So he's native to the Valley. And we have a native Israeli sitting there, and myself, who is kind of a bit of all-around player, traveling around the globe, but based in Sydney most of the time. So we really see it as a global game, and we see the need in the companies that we invest in to go global almost from day one. And we think that between these 4 territories, and by the way, we look at deals from at least 20 other countries, but in terms of going global, so going to China or going to US, that's like one of your first 2 choices, and we have both of them covered. So yeah, I think the future obviously will prove us right or wrong, but at least that's our strategy.
Eylon, how do you see that as we learn about the advantage of variety on the one hand and cooperation on the other hand, how do you see really the value of cooperations between funds, whether they are Israelis or others?
So obviously, on the one hand side, we're very competitive. We're competing on deals. Each one of us is trying to create his own proprietary deal flow and get the advantage of getting first to the good companies. But on the other hand, I think we're very collaborative, and at least we at Viola, we lead or co-lead deals, but we always have partners around the table. And, we work very hard, and people from the outside sometimes mistakenly think that everything flies high, but it's very rare to invest in a company that only goes up. Usually there are bumps on the way, and you need good partners around the table to be there with you when things go bad. So we put a lot of emphasis on choosing our co-investors who co-invest with us. And we're trying to select them, first of all, with the chemistry that we have in working with them, but also on their added values. So we always like to collaborate with Israeli funds, but we love collaborating with foreign funds who have the added value of opening the doors and helping our portfolio companies outside of Israel, and that's very valuable.
Yeah, I definitely agree on that, and it's really the harmony around the table between board members, shareholders, founder, tend to be extremely important and influencing deeply the result at the end of the day. One of the challenges that we do have, and there is a lot of different opinion on that, is why is Israel not building huge companies? The average on the exits this year till today, even though we had some big ones, but the average number is $74 million. And a lot of criticism was on the Israeli companies because of the fact that we are not maybe patient enough and selling the companies.
But that's changing.
Yeah, please.
That's changing dramatically. 5-10 years ago, we as funds, if somebody came with a $50 million check for our companies, we would probably take it. But the industry is dynamically maturing, and we understand, on the one hand side, that we need to build big companies in order to generate the returns that we are expected to generate. And on the other hand side, we realize that we can do it. And if you look at today at the company landscape, you'll see many companies which are selling tens and hundreds of millions of dollars in revenues and are worth hundreds of millions of dollars and some more than $1 billion. It was published just lately. We just raised $180 million to a fintech company called Payoneer, which is one of Israel's largest fintech companies at a valuation which is close to $1 billion. Now, it's not $1 billion on paper because some of the 180 was a secondary transaction where we actually sold shares of the company. Somebody paid at a value of $1 billion for a company which is generating hundreds of millions of dollars in revenue. So it's achievable. And I think once the US stabilizes and the IPO markets start functioning again, that we will prove that we can take these companies out public at amazing valuations, which haven't been seen before, apart from Mobileye, for example, which was a unique case. And I'm sure we'll see more of those.
But still, I do have the feeling that founders, at least the first-time founders, I was involved recently in a deal, was a lot in the media on this deal. I don't want to get into names, but the company was sold because of the founders who insist on taking the deal, even compensating the VC in a way in order to let the deal go through. I was disappointed myself because I thought the company can go all the way, but deal was done. You want to?
Yeah, I think that there are a few ingredients that impact this situation. First, the market is developing, so you can see much more second-time entrepreneurs that has less eager to sell the company quick. Second is if you select the right companies with the right technologies that are going to approach a big market and has the potential of being $1 billion company or more, or one of the unicorn, you have the potential of bringing a big company and not only a subset or a feature or a small solution that targets a limited market. And the third ingredient is really the investor. So how do you incentivize a new entrepreneur to stay in the company and to grow it, rather to sell it immediately at the first occasion that he has? And it's much more how do you structure a deal and how do you make the entrepreneur committed to build a big company?
Alex, yeah.
The situation you described is something we know, and we developed a program where at some of the rounds that we do, we buy some of the shares off the entrepreneurs and trying to lower the pressure. So they can pay off their mortgage, they can buy some jewelry to their wife and get the pressure down and continue building a big company. And
wives are the problem. Thanks everybody for listening to that. Alex, you think that I was very surprised to read the research where founders of Israeli company took it all the way to exit in the percentage of 68%, meaning that in most cases, US CEOs that replaced the founder failed. Do you see any chance to change that, any necessity to change that, or we just need to let the founder go all the way through, or how do you look at that?
I think it's part of the maturity of the the markets that are developing. I think what people, and it depends, as they've said, if you get an opportunity to take some money off the table, so you're comfortable enough to keep going. I think it's also the age of the founder and where they are and the other thing. But I think it's also I think because it's a competitive deal environment now, people can raise money at higher levels and can continue. If you're, my experience is if you, as an investor, I mean, if you find a management team that has delivered, and if you have confidence in them going to the next level, and some can and some can't, you want to encourage that to happen, because obviously you get the value accretion to the next level, maybe not the same increments, but it's still powerful enough. And as an investor, it's much stronger proposition to go with people you've already developed a relationship and you've seen their performance. So again, how do you incentivize that and see that it's happening? But I think as the whole maturity of the Israeli tech space has happened, and people have go into their multiple startups, and it's easier just to continue with it and then to step away, start again. It's competitive. You've got to build a team. The team is not so available as before because they may be locked up. So I think it's a natural progression, and I think it's a good thing for Israel to go to that next level and build out the companies. And those who do it, I think, are great spokesmen for ambassadors for that happening, because we're now seeing that it can happen, and the management capabilities are maturing to take the companies to the next step.
Andrey, last question for you or for all of us. Just try to describe us our world in terms of investments 10 years' time.
In 10 years' time, I think that the funds would be driven by data, or at least, again, the screening will be driven by data in the majority of the industries, because ignoring this data would pretty much be a crime.
All right. Thank you, everybody. It was really interesting. Pleasure to have you.